Good afternoon. My name is Nancy Mader, and welcome to Linked Over Lunch with the Federation and the Link Center. I'm here with Mary Rubinis of MEFA, and we're going to talk about ABLE accounts today, but first we're going to hear a little bit about MEFA from Mary.
Hi, Nancy. Thanks for having me. I'm excited to be here. I am the Attainable Outreach Manager at MEFA, and Attainable is the Massachusetts ABLE Savings Plan. And MEFA is a not-for-profit state authority, and our mission is to help families access and afford a college education. We do that through free guidance that we offer around the whole process, some tax-advantaged savings plans, which Attainable is one of those, and we also do private loans as well. And just to share, when you go to open an Attainable account, you're going to do that through Fidelity. MEFA is the state sponsor, and Fidelity is the program manager. So when you go to open one of these accounts, you're going to do it through Fidelity.
Okay.
And the reason for that partnership is Fidelity came on board in 1999 to manage the Massachusetts 529, which is the U Fund. And so when Attainable was launched in 2017, it was natural for us to partner with them and for them to manage these accounts for us.
Great, thank you.
Mm-hmm.
So let's start with, what is the ABLE Act and how is it significant?
So the ABLE Act, or the Stephen Beck Jr. Achieving a Better Life Experience, is what the acronym stands for. It's significant because it was federally legislated in 2014, and what it did was it created a new tax code in the IRS tax code, which is a 529A, which is what an ABLE account is. And it recognized that there was a significant cost to living with a disability. And so it created these ABLE accounts, which are tax-advantaged savings accounts or plans for someone with a disability to save for what they call qualified disability expenses, without it affecting means-tested benefits if they're getting those benefits. You have to be getting benefits in an ABLE account, but if you are, the advantage is that there is protection in putting the money into ABLE, because you can, save up to, say, $100,000 without it affecting your SSI.
Okay.
And the other thing I wanted to mention is that the ABLE Act was the most significant piece of disability legislation to pass since the Americans with Disabilities Act 25 years ago. So hugely impactful,
right.
Hugely important.
Right. So more specifically, what is an ABLE account?
So an ABLE account is a tax-advantaged savings account plan for someone with a disability to save for these qualified expenses. Some of the benefits of an ABLE account, there are no federal taxes on the earnings or the withdrawals. Right. You can save up to $100,000 without any impact on SSI. It eliminates that whole idea of being able to save that type of money. It eliminated the $2,000 asset cap, which still exists. So unless you have an ABLE account or a trust, you can't save more than $2,000, right, or otherwise it's going to affect your benefits.
Right.
The other thing that ABLE can do, which is different from a trust, is you can directly pay your housing expense from an ABLE account. You cannot do that with a trust. If you were to do it from a trust, it would affect your SSI. So what some people do is they can work nicely together. If you have a trust and an ABLE account, you can move the money from your trust into your ABLE account and then directly pay your housing expense.
Okay.
And really, overall, these accounts were just designed to enhance, quality of life, financial independence, create financial literacy, right, really just enhance someone's quality of life with a disability.
By taking away a lot of those worries about affecting your Social Security.
That's right.
And I mean, I know we get a lot of questions about the ABLE accounts. And I think one of them is, how do families and individuals become eligible for one of these accounts?
So in order to become eligible, I get this question all the time. The disability has to have occurred prior to the age of 26, and you have to have one of the following. So if you meet the age requirement and you're getting SSI or SSDI, you're automatically eligible. Even if you're not getting those benefits, if you meet the age requirement and meet Social Security's list of, they have a list of functional limitations, then you would be eligible to open an account.
Okay. Okay. Who is the owner on an ABLE account?
So the person with the disability is the account owner, or they call it the beneficiary.
Okay.
So they manage the account themselves. If for some reason if they're a minor or if they can't manage it themselves, with Attainable, Fidelity lets you set up what's called a person with signature authority, or a PSA, and that person would then manage the account for that individual. So essentially, that individual with the disability is managing it unless they can't or are a minor, and then you would set up the PSA.
Okay.
And they would do it for that person.
Okay.
Yeah.
All right.
Mhm.
All right. So, what are considered qualified disability expenses?
So the expenses, there's a broad category of expenses. They are things like education. You could use it to pay for tuition. Housing, like I mentioned earlier. You can use it to pay for transportation. So if you need a car to get back and forth to work, you can use it for that. Or if you need to buy a handicap van. Basic living expenses, healthcare, any healthcare needs. Assistive technology. So if you need an iPad to communicate,
Right.
you could use it for that. And like I said, anything related to your disability is sort of a general category that you can use it for. It has to in some way relate to your disability. I tell people the list, there's a chart, isn't exhaustive. So there are going to be things that fall outside that, like if you had a child that needed to go to therapeutic camp, could and they obviously
Right.
had an ABLE account, could you use it for that? Yes, absolutely. Right.
Okay.
Because it relates to the disability, they need to go to a therapeutic camp.
Right.
So there is the category. It is general. People sometimes say to me, oh, it seems kind of general. It just has to fall within those categories and relate to your disability.
Okay. Is there ever anything that doesn't fall within that you've had someone ask you?
Yeah. So the question that comes up a lot, that's a great question, is a vacation. People ask, because the language around what this is intended to do is to
Right.
foster and enhance quality of life. And so people will say, oh, if I take a vacation, that's certainly going to enhance my quality
Right.
of life, which is true. I agree
Right.
with that. But I say to people that, again, it's not within that criteria of eligible qualified expenses. And so I'm not so sure the IRS would consider it to be a qualified expense. So I always tell people to err on the side of caution and, obviously not use it for that. You need to use it the way it's intended. That being said, if you needed to have a personal care attendant to go on vacation with you, could you use it to pay for that person? Yes, absolutely.
Okay.
Yeah.
Oh, that's really good. That's clear.
Mhm.
That's a really good example. So if you had a question about whether something would fall under being qualified, is there someone you could contact?
Yep. So people can certainly reach out to me. I'm always happy to be a resource for people if they have questions. The people at Fidelity are also trained to answer any questions around Attainable. So you could reach out to them. You can do that. There's a dedicated 800 number that I think we'll share at the end.
Okay.
That they can answer any questions. Also online, you can open one of these accounts online. And Fidelity actually also has investment centers throughout the state of Massachusetts. There are 9 of them, I believe, that you can go in person and open an account. I'm not sure, I just thought of this if I mentioned this at the beginning, but it is the Massachusetts ABLE Savings Plan, but you can be a non-Mass resident and open this. So you can live outside Massachusetts and open an Attainable account.
Okay. So let's talk about some of the basics. I think questions that we get a lot is like how much you can save. Like what are basic information that people need? So in terms of how much you can save, the cap currently is $15,000 per year. So you can put up to $15,000 per calendar year into an ABLE account currently. That has gone up from when they first started. The initial cap was 14, so they've continued to grow. So now it's up to 15,000. $100,000, just to reemphasize, is that amount that if you are getting SSI, you can save up to 100,000 with no impact. But then once you get to that 100,000 mark, if you go over, your SSI benefits will be suspended but not terminated. And then once you drop back under, they say they'll reinstate them. And then the max that you can save in an ABLE account is $400,000 currently. So quite a bit of money. Yeah, that is a lot of money. Wow. So where can anyone go to open an ABLE account? So
To open an attainable account, you can go to the Fidelity website, which is fidelity.com/attainable. I'll give you the 800 number now. You can also do it over the phone. It's 844-458-2253 to open an attainable account over the phone. And like I just mentioned, you can also go to, there are 9 investment centers that are geographically located throughout the state of Massachusetts that you can go in person, which sometimes is kind of nice to go in person, that you can go in person and open one of these as well.
Okay.
And again, they're trained to answer any questions that you might have, and any questions around the portfolios, in terms of how you're going to invest the money. There are a range, I'll just share this, there's a range of portfolios that you can pick from. You're investing in the stock market, and they range from a low risk money market, and then they just get more aggressive in growth. And there are 8 portfolios to choose from. And you can change the allocation on those twice a year, up to twice a year.
Okay.
Mm-hmm.
What advice do you have about people who are thinking about opening an Able account, but are nervous about it? Because it is the stock market, and they are always worried about Social Security benefits.
Yeah, I think again, if you have hesitations about, obviously, if you have hesitation, everyone has it's a personal choice in terms of how you want to invest your money, whether you're saving for short-term or long-term planning. You may just be saving for expenses right now. So you want to be more conservative. So you can certainly do that in choosing that money market, which is the lowest risk. You can certainly do that and minimize any risk using that option. And again, if you want to, increase the amount of money that you're able to, to grow the account, at a higher rate, then clearly you're going to have to invest more aggressively. And again, that's just a personal decision.
Right.
But if you're going to invest more aggressively, the return is going to be greater. So it's just that balance of what you're looking to do and how you're looking to invest. And
but it's really like the long-term goals that you're looking at is giving your young person or your family member a little bit of freedom with their money.
Yeah, absolutely. And I think the great thing about this is it's really just enhancing someone's financial independence in terms of being able to save over that $2,000 asset cap. That's huge.
Really huge.
I think it creates financial literacy because it's, allowing that individual to really manage their own money and be a part of the process and be able to just, again, enhance their quality of life and just create more opportunities and just independence for themselves. So it's fantastic. It's win-win.
Great.
Mm-hmm.
And I know that there has been some tax updates that you wanted to let us know about. So we do still have time. So let's go over those things, and then we can, I think, a good recap to sum up what we've talked about at the end. But let's start there.
Sounds good. Okay. So yeah, there were 3 significant tax updates from 2018 that I thought I would just touch on. The first one is the Able Financial Planning Act. And what that does is it allows someone to roll over from a 529 into an Able account now. The cap is that $15,000 per year. You have to stay within that, the calendar year, $15,000. It has to be, the beneficiary has to be the same individual on both accounts, or a family member of the other, so a brother or sister, that type of thing. But you can now roll over without any tax penalty from a 529 into an Able account. The other one, which is huge for people who are working, it's the Able to Work Act. And what this allows is the individual with the disability who's working to actually contribute over the $15,000 in the calendar year. And that is based on their adjusted gross income, whichever is less. So their adjusted gross income or the federal poverty line for one person, which is $12,140. So whichever of those are less, you can contribute up to that amount over the $15,000. So potentially up to $27,000 tax advantage, which is huge. Yeah. So a lot of money. So for someone who's working, that's a huge benefit. The only criteria for that is if you do take advantage of that, you can't participate in your employer's retirement plan. So you can't do both. but definitely for someone who's working, that's a huge benefit.
Right.
The other one is the Savers Tax Credit, which existed for retirement savings and now exists for ABLE account beneficiaries. And what that is essentially a tax credit based on how much you're contributing to your ABLE account. So, and there are some criteria for that. In order to be eligible for the credit, you have to be 18 or older. You can't be a full-time student, and you can't be claimed as a dependent on another person's return. And essentially, like I mentioned, it's again based on your income. So based on your adjusted gross income, it's a credit based on your contribution. So there are income requirements for it. I won't get into it to say all the numbers, but essentially it's a percentage that you can take. So it's either 50%, 20%, or 10% of your contribution. So if your income was, your adjusted gross income was $25,000 and you contributed $2,000 to your ABLE account, because of where that falls, the $25,000, you're eligible to take a 50% credit, or 50% of $2,000, which is $1,000. And then if you make above, I'm just looking at the numbers, if the person earns between $30,751 and $47,250, the credit's not available to those people because they're making above the dedicated amounts.
Okay. All right. I'm not sure if we've lost everybody here.
I know, I see that.
So I'm going to end and then we'll jump back on.